Hello, hello. I think we still have the, oh, there goes the spa music. Hi, all. Greetings from the metaverse. I have good tidings. Today's a big day that we're doing an early sneak release of the Samsara app. Let's actually pull that up, have that on screen besides just my face. So, what is happening with Nirvana? There was a question in the AMA channel in our Discord, which is very simple. I liked it a lot. Just what is an AVM? You're using that word, AVM. It's the name of this primitive. It's the name of this structure, a structure for markets. The key insight with Nirvana takes its point of departure from looking at something like a high-profile ICO. Not throwing stones here, but consider Pump Fund's launch. That's in the news this week. And the price of that token has been, not down only, but quite down from its initial listing. Not only that, but there's a lot of it out there in the world in people's hands, and it's not exactly correlated with how much liquidity you're going to find on any given market. Can we do better? Is crypto supposed to change the way finance works? So far, it hasn't really. I'm still waiting for the moment when we, quote, reinvent money, unquote. But what we can do is reinvent how markets are structured. AVM stands for Assured Value Machine. It's a proof of value protocol that makes liquidity a property of the token itself. Now, I know that sounds very ponderous. So liquidity is a property of a token. But if we unpack that, what it means is that you cannot have tokens without liquidity. There is no such thing as a bearer asset and an absence of liquidity to go with it. That's it. And the fact that liquidity is a property of the token implies that it's controlled by a protocol. It's not something that a human by fiat or will could remove from the token. Okay, so what's the status quo with an ICO or an IPO for that matter? You just print shares. You just print tokens. You give them out to people in whatever way. Maybe you don't give them out. Maybe you sell them. Maybe there's a little over-the-counter action. Maybe there's an airdrop. But something's being exchanged. A token is going to a person. I don't even need to call them tokens. Let's just call them assets. Assets go to people. In exchange for that, perhaps some money goes back to the person who had the asset. It's human to human. Nothing about that structure implies that there's any liquidity at all to sell them. And nothing about that implies that there's any liquidity at all to buy them. The point of value, the point of having value, the point of storing value is that you can sell it. Paper gains are exactly that. What an AVM does is assures mechanically that every token in existence has value, truly has it, stores it. It has it as a property. What a token launched through an AVM does is translate, store, reserve any of the money used to buy it into the market itself. So when the token is purchased, the price goes up. When the token is sold, the price goes down. And with those purchases and those sales, as the price of the token goes up and down, so does the liquidity. The more the token is bought, the more liquid it gets. The less the token is bought, or the more it is sold, the less liquid it gets. With one caveat, until it hits the floor. You could say, let me zoom in a little bit. So I'm saying it gets more liquid as it's purchased, less liquid as it's sold, because liquidity is a property of the token itself. But in a certain sense, when you're at the floor, liquidity goes to infinity, which sounds a little enthusiastic, but bear with me. Liquidity and volatility are two sides of the same thing. If something is highly volatile, that's another way of saying it's not very liquid. If something is not volatile, that's a way of saying like, oh, this is a liquid market. Like no matter what people are doing, the price isn't moving at all. When the price of an asset is on the floor of an AVM, the volatility goes to zero. It can't go beneath that floor. And so one way of thinking of this is if volatility is zero, liquidity is infinite, meaning once again that the value that the token holds is assured. It's guaranteed mathematically. Everybody could sell back. And when they sell back, they know what the worst case price is. All of this is a long warm-up to introduce what's going on with Samsara. So this AVM model was applied to Nirvana. This is the flagship store of value protocol. Decentralized, eternal, scalable. It's designed to scale to tens, if not hundreds of trillions of dollars. That kind of depends on the global monetary supply, but it does scale. And the purpose of Samsara is twofold: to take this AVM structure, apply it to existing assets so that the mind share, the common sense, will become accustomed to what an AVM actually is. We want people to come to expect that assets have floor prices. We want people to come to take it almost for granted that in the future, new assets will have two lines on their chart, and an asset without a floor price underneath it is seen as legacy, as second rate. This is a model that crypto has gone through many times before. There was a time where we didn't have decentralized governance, and nowadays we've just come to expect that. Like, what, your protocol has centralized governance? That's not very crypto of you. Privacy is going to be something I believe people will come to expect from token transfers. Anyway, this is another sea change in the story of crypto, that assets can have floor prices, and it's something that, because they can have them, they should. There shouldn't be ICOs that go down only and have liquidity rugs. We've seen that enough times now. We're ready to move on. That's point number one, is to make this common sense. Point number two for Samsara is the horizontal expansion of revenue to Nirvana. This is an exchange. It's an exchange that takes the AVM model and can apply it to any fungible token out there. And I do mean any. It could be Sol itself, or any of the staked derivatives of Sol. Could be Bitcoin, could be ETH, could be the Trump coin, could be any kind of low cap meme coin. It could be other derivatives, like a tokenized receipt of a liquidity pool token. How many times can I say token? When you make a market on most AMMs in crypto, you get back a receipt token, which represents your share of the deposits in the market. That can go through Samsara. Anyway, because it's an exchange, it produces revenue. Exchanges have a tendency of doing that. I've been watching the volume of some popular exchanges on Solana tick up quite dramatically in the last few weeks. Exchanges produce revenue. A portion of the revenue in the AVM, a portion of the revenue from Samsara, always goes back to buy the ANA token. That's one place the revenue goes. Almost like a robotic Michael Saylor who's always top blasting ANA. The revenue produced from this goes into one stream that just buys the ANA token, buys the ANA token, buys the ANA token, buys the ANA token, and that's all it does. It has no emotion, it has no decision-making power, it's not doing any risk analysis. It just buys ANA. One thing Nirvana could use is that kind of robo Michael Saylor. But this is even more Michael Saylor than Michael Saylor, because it does it every single minute. It's just buying the ANA token. Another portion of the revenue goes to the governance token holders continuously. The governance token in Nirvana is called Prana, and it's given out fairly to people for just holding the ANA token. The longer you hold ANA and the more ANA you hold, the more of the governance token you get. It's a very simple machine like that. And Prana deposited into here starts collecting a pro rata share of the revenue. Okay, so now there's this twofold benefit to the value of ANA, because not only are the market buys pushing the price of ANA up, but the fact that ANA holders have access to passive income over here. They have access to continuous dividends from a spigot from these Samsara markets, enlarges the value of the governance token. If each governance token itself is earning $10 a year in passive dividends, then you would expect that the value of the ANA token would follow suit, since it's the thing that gives you the governance token. And then finally, the revenue is, there's another stream of revenue, which is paid to the users of Samsara itself. So there's a three-way split of how revenue gets divvied up into the ecosystem. All of this to say, the Samsara expansion is explicitly meant to raise both the awareness of Nirvana and also the value of it. At risk of repeating myself, it raises the value by market buying ANA, and it raises the value by paying passive dividends to holders of the ANA token when they come in here. So what's the rollout going to look like? This that I'm showing you is just a DevNet app. These are fake representations of a few popular tokens, Sol, Bonk, JLP, just for fun. Could have added 20 more, just started with 3 to prove the point. They're tracking the actual price of JLP and Sol and Bonk, so they look like a duck, they quack like a duck, but they are fake DevNet tokens. And when you use the app, there's a faucet to give you a gift bag of these tokens to play around with it. What this does, let's talk about the story for Bonk. What this does for Bonk is it creates a Nirvana-style reserved back rising floor and a liquid market for a new kind of derivative token. We call them Zen tokens, to stay with our brand. So Bonk gives you Zen Bonk. What is a Zen Bonk? You can think of it like an amplification of Bonk itself. It's quoted in terms of the underlying asset. At the initial launch, it'll be worth some ratio of the underlying base currency. We set this up so that it's worth nearly $1 at launch, just to make things simple. So you started off where 1 Zen Bonk is worth about $1 of Bonk. But it's not quoted in terms of dollars. It's quoted in terms of the base asset. It's a derivative. It's a new kind of derivative on the base asset itself. What this means, what we're looking at here with this price line, is that the Zen Bonk token started off being worth 27,000 Bonk, which is about $1 back at that point in time. And as people buy Zen Bonk, it's amplifying the value. So now if you're holding 1 Zen Bonk at this point in time, it's worth 73,000 Bonk. That's about twice as much as the launch. So you bought something for one quantity of the asset, the price expands, the price enlarges, and now it's worth more of the same asset. The same thing is going on with the floor. It's ticking up so smoothly and gradually, it's kind of hard to see the exponential curve here. The minimum price is also quoted in terms of the bonk token itself. What's happening under the scene is that there is an oceanic reserve of bonk tokens that is filling up with the purchases. When people are buying more and more Zen bonk, the bonk tokens themselves go into the protocol-owned reserve, the protocol-owned liquidity, and they rest there. What this means for a protocol, such as bonk, a project, a company, somebody who's making tokenized stocks or tokenized dollars or a tokenized speculative asset like SOL, is that a samsara market functions as a massive sinkhole, a sponge. It generates demand for that token itself. There's a bunch of bonk and SOL floating out in the world. This is a place where you can spend it to get more of it. If you are long on bonk and there's a healthy trend line, you can come speculate here and amplify your bonk holdings, while also, removing, so to speak, the circulating supply of bonk into this reserve, which is holding up the floor. So the market is filling with bonk liquidity. Another benefit of this for projects, people who have tokens and are looking for things to do with them, is that an AVM is self-bootstrapping. It doesn't require any initial liquidity to cold start it. It starts from absolute zero, and it's single-sided. Where bonk just goes in, Zen bonk comes out. It's a very simple system in that respect. You don't need to put up dollars or other quote assets in order to make this thing liquid from the get-go. So that's another benefit to teams, to products, to companies, in that there's no cost to list here. There's no cost to start it. And that's typically not the case when you're trying to make a new market. Again, try to imagine what it's like being, say Pump Fund. Again, they're just recent in the news. You create this massive, $4 billion market cap token, and you want it to be liquid on day one. Where do the $10 million come from to seed these markets? Who's putting up those dollars? Here's a hint. They're not our friends. They're not people who want to lose those dollars. They're putting them down as market makers to have a bet that they're going to turn a profit. What an AVM does is it creates a market without a market maker. And this is what's meant by protocol controlled. Other kinds of markets that you'll find in, quote unquote, DeFi are actually still operated by humans at the end of the day. They still depend on humans to provide liquidity, and those humans can change their mind and pull that out. Not so with this. Okay, so it syncs up the floating supply. It absorbs it into a reserve, and it gives back this amplified derivative, something which is worth more of the same thing, something which is worth more of the base asset. There's another feature that this has, which is credit. I would contend that if you ever wanted to create a good store of value, if you took a step back and asked yourself, okay, what does it mean to store value? If I said this asset stores value, what am I looking for? It's three things. You're looking for liquidity, check. You're looking for durability, which is to say, there's not going to be an 80% implosion in value. And you're also looking for creditworthiness, that it's an eligible collateral. Something's not a very useful asset if you can't get credit based off of it. I think of like trading cards or something like that. They might have value, but it's very hard to find a banker who will give you a loan secured by your baseball cards. The AVM has a native credit module built into it. So you hold your Zenbank and you get a line of credit precisely equal to the floor value of your holdings. You're able to borrow bonk tokens or any other asset, any other base currency out of the AVM up to and including the the floor value of the asset that you're holding, of the Zen token. Why do we stop at the floor value? Because just like this is a market without market makers, it's credit capital without lenders. The lending is managed by a decentralized protocol, just as the liquidity is managed by a decentralized protocol. And because the protocol is the lender, the protocol can't come knocking on your door and margin calling you. The protocol is dedicated to just the mathematical rules of its system. And it doesn't want to depend on a human risk committee, setting LTV ratios and margin requirements and, going through an arduous governance change process to alter these values. No. Make it so simple. The fact that a Zenbank or a ZenSol or a Zen BTC or a Zen S&P 500 can never go beneath its floor price means that as a collateral, it can secure a loan up to the floor price without ever needing to margin call you. This is borrowing without liquidations. And I can't help myself but make another jab at the status quo. The instability of markets and crypto, the black swan events that tend to happen every 3 years, are always because of liquidity crises, which are precipitated by leverage drying up, forced closeouts, forced selling. Everyone loves leverage. Us humans, we can't help ourselves. And every time you see the market capitalization of crypto go down 50%, it's because of all of these forced liquidations at the root of it. And I have my doubts that all these treasury companies coming out these days are going to prove the point once again. It's been about 3 years. It's time for this to happen again. This is why I believe that an AVM is the right footing for the next wave of assets, that you can borrow without running into the problem of liquidation. There's lending, there's leverage, yes, but without liquidation. There's a theme here, which is you get to keep the good things and avoid the bad ones. You have speculation, you have P&L, you have EV, you have profit, you have loss, you have gambling, whatever you want to call it. But you don't have a liquidity crisis where all of a sudden you're holding a bag that you can't sell. So we have markets without market makers. Liquidity is a property of a Zen token. Point number 2 is you have lending without margin calls, without liquidations. We can solve both of these perennial problems of finance in one simple gesture, and it all comes down to this floor price. So this is a good thing for people who are long this token. If you are long SOL, let's run through a war game. If you are long SOL, and the price of ZenSol is at or near the floor, it is simply rational to buy a ZenSol, especially if it's at the floor. If a ZenSol is at the floor, it can go down no more in terms of SOL. It can only go up in terms of SOL. And if you like holding SOL, you're going to love holding ZenSol when it just expands in terms of SOL itself. You have profited. On top of that, If you are into Zen Soul, if you think this is going to the moon, lever up. You can borrow Soul with no interest, no liquidation risk, and use that to buy more Zen Soul. Or you could use that to just sell on the open market and pocket the cash. And in most jurisdictions, that would be tax-free, wouldn't it? Or you could take that Soul that you borrowed and go deposit it in a traditional lending broker. A traditional lending broker that would assign some LTVs, have some margin risk, liquidation risk, whatever, but you could borrow dollars based off of it. So you can take the Soul out of this at the floor value and go use it as collateral somewhere else, or go lend it, rehypothecate it, put it to work. Do what you will. The point of the AVM is that it grants you this ability to use the token that you know and love to do what you want with the asset, while retaining your exposure to the Zen token itself. And that's the gist of Samsara. It's going to start in a controlled fashion. A few tokens, a few assets, make events based off of the listing, the unveiling. You crawl, you walk, you run. Eventually, where this is going is to have thousands, if not tens of thousands, if not hundreds of thousands of tokenized assets inside of here. The interesting thing about Samsara is that an AVM is zero cost to start. And so in the end result, man, what is the number these days? There's probably something like 50, 70, 100,000 tokens created a day on Solana alone. It's probably more around 50,000 these days. Each one of those could have a Samsara market. Each one of those could have a perfectly self-liquid Zen derivative based off of them, because it takes no cost to bootstrap these. I feel like some people using the demo are trying to experiment with selling it into the floor right now. That's where this heads. To create as much revenue, reach, breadth as possible with this model. You can't do that with Uniswap or all of its copycats. You couldn't create a Uniswap market for each and every token in existence because they would have no liquidity. You have to put up the money to bootstrap these markets. You could not create a lending market for each and every one of these assets for I don't know how many there are, let's say 500,000 tokens out there. You couldn't create a lending market, once again, because of the liquidity, and also because the risk management, the cross collateralization, it's intractable. But you can create a Samsara market for each one of these. And the Samsara market, because it obeys simple mathematics, bootstraps itself and follows its own rules. So that's how the rollout is going to look. Start focused, start heavy with the focus, and broaden it out so that this becomes a ubiquitous place for derivatives trading. And I've offered some ideas for how these derivatives can be used, but the limit is really your imagination. This is kind of like the invention of the perpetuals options contract, which I believe was in the 80s or the 90s. And then somebody had the bright idea to apply it to crypto. And now you see it everywhere. Perpetuals. The AVM is something like that. It's a new way to structure markets, and how people will use them, how people will build on them. Who knows? Who knows? We're going to find out. One last point that I'll make about the revenue is that the interesting thing about a Samsara market is that the fact that it doesn't have market makers means that there are no mouths to feed. Typically, when you have a liquid market, you're paying fees to swap. Who are those fees? Why do you even pay fees? Why does a market charge a fee? It's just math at the end of the day. What are those fees for? And I think it's actually valuable to ask stupid questions like that. Why do AMMs, which are just code, charge a fee? They could be free. In their case, it's to incentivize liquidity providers. The fees are at the expense of the users, the traders, in order to lure liquidity in. You have to pay the liquidity providers to take on that risk, to take on that gamble, which oftentimes does not work out for them, almost always. Now, that's what the fees are for. And when you look at it and squint, it seems kind of like a broken system. That there have to be extra fees in order to make this thing happen. Fees that the actual users of the exchange, the end users, wouldn't want to be paying. Because there are no market makers here, the fees don't have to go anywhere else other than where they're productive. The reason Samsara charges fees is for the betterment of the Nirvana ecosystem. It's so the fee revenue can go to the governance token holders. It's so the fee revenue can go to market buying Ana, like a idiotic, robotic Michael Saylor, and that's all he does every day, he just buys Ana. And the fees go to users of these individual markets. So if you're buying a Zen token and you're holding it, as a matter of fact, you are the liquidity provider. And so it's only good and true that you should earn a cut of the fees. In my effort to say everything at once and keep this simple, I left out one other detail about where the fee revenue goes. It's a fourth stream. So one of them buys Ana, one of them goes to governance token holders, one of them goes to Zen token holders themselves as a way to just thank you for holding the Zen token. Here you get passive income. Why not? And a fourth stream invests directly into raising the floor. So a fourth stream of the revenue goes into the health of the individual Samsara market itself, raising the floor. I'm pretty sure if you're listening to this, you're familiar with the mechanics of how an AVM works, how Nirvana works. But just to summarize, what makes the floor rise is the fact that the market has swollen with more liquidity than it needs. And what that implies is that the price has gone up. People buy. They're putting more and more and more money into the market. With a higher price, there's more liquidity. And that liquidity gets invested into raising the minimum price for all tokens in existence. That is the classic way that the floor rises. It rises automatically when there's enough liquidity. There's a trigger event, a condition where enough is enough to raise the price for all tokens. What Samsara is doing is adding in another crank into the floor, because we love the rising floor. We love the rising floor because it gives us more credit. We love the rising floor because it minimizes downside risk. We want more energy going into raising the floor. And so there's a fourth stream of the fees generated by this, which just get piled into the floor to push it up. And incidentally, that same feature will be applied to Nirvana. And incidentally, part two, the way that these fees are split is all governable. They're not arbitrary numbers made by fiat, but they are tuned through the same kind of incremental weekly governance that is used on Nirvana, which between you and me is one of my favorite parts of Nirvana, the way that it has self-tuning incremental governance. Oh, there goes the price. Who are you, EGQJ? The way the fees get divvied up is up to the token holders, up to the governance token holders for each market. And I fully expect that each market will come up with different regimes. There might be some high-flying, highly volatile meme coin. it's not in it for the long haul. And it just wants to have fun for a month in the sun. And the governance token holders for that decide to route all of the revenue that they can into raising the floor because they just want to see this thing rip. And they're thinking, give no fees to the token holders, give no fees to the governance token holders, put all that money on the floor. Let's just see what this will go. And there might be other assets that are not as volatile. They tend to crab walk, but they tend to do a ton of volume. And in that case, that market might be governed to route a lot of the fee revenue to the token holders themselves. The Warren Buffetts of the world that just really want dividends. They're not so much interested in wild swings in the price. They just want to see that passive income come through every second, every block. Who knows? Each market is separately governed. Each market is separately governed by prana. This makes prana very valuable because governance is zero sum. Dividends are zero sum. When you're using governance tokens to vote on one of these samsara markets, when you're using governance tokens to earn dividends on one of these samsara markets, you're not using those tokens to vote or earn dividends on other markets. If you have 200 samsara markets, this prana is going to become very scarce to earn dividends and govern all of them. People have to make choices where they allocate their prana in order to have vote power here at the expense of having vote power there. The zero sumness is what makes an asset ultimately valuable. And not only is samsara going to absorb the overhang of supply for tokens that are out there, but it also absorbs prana, making it very, very valuable. I'll leave it here. I could talk for hours about how this works, what it means, how to use it, but mostly I want to just get the URL out there so people can come in and play with this. If you're listening to this, do bear in mind this is an early beta, or maybe an alpha, or whatever comes before alpha, and I want you to try to break it, find bugs, let us know on Twitter or in Discord. And also let us know whether the UI is intuitive. One thing that we're aspiring to with this is to make it immediate, immediately understandable, somewhat fun, something that behaves more like a high volume exchange, where you can get your hands right on it and start using it right away. So really welcome all the feedback about this. There's going to be changes, improvements to the app now that it's live on Devnet. Expect to see changes at a regular clip. This is its debut, but there are new features in the stables going through the final bit of polishing to come through. Two of which are a page to manage the governance per market, and also a page to manage your dividends that you earn from the revenue of the market. I expect those will be coming out, if not later today, maybe tomorrow by the end of this week. So you can start exploring with how fees actually get collected in a passive way. But here it is today, the beta for this. One thing I also expect that we will do is a similar festivity that we did once with Nirvana. We created a fake copy of Nirvana, a shot-for-shot carbon copy, but using fake tokens. And in order to prove that an AVM is a proof of value, coordinated a massive pump and dump to just see if anybody could be able to break that floor price. We'll probably be doing that with these DevNet tokens for things like Bonk or Sol also, to say, come and break it. Let's do the Temple of Bonk campaign. And everybody can push the price up as much as they want. And then on the count of 3, we'll all sell and show don't tell that the floor price is what it says it is. Let's see. Looking in the AMA channel to see if there are any other questions. There's one question about how do we fund ourselves? Like, who's paying for all this development? Who's paying for the audits? Who's paying for the databases, the servers? Where does that money come from with a pure protocol like this? What Samsara will do is market by ANA, just buy, and put that ANA in a drawer. This is not your typical buyback or buy and burn. It's more of a buy, borrow, and never do anything else again. The ANA that gets amassed from one of the streams of revenue just goes into a black hole that nobody has the keys to. It goes away. It just gets bought and deposited. But what is returned from that is credit. So the company, by amassing ANA as a share of the fees from this, is just pushing the price of ANA up and then borrowing NERV back on Nirvana, borrowing the stablecoin, wrapped USDC, and funding itself through that line of credit. I really like this system because you never sell the token, never have to sell ANA at all. There's no liquidation. And to me, this is using Nirvana as intended. Nirvana is designed to be the perfect store of value, the ultimate store of value. Something whose job it is to have value, hold on to it, and not lose it. And what an ultimate store of value gives you is credit, and that's just what we'll use. This is different than the models of treasury companies. It's different and it isn't. There's this trope these days where you have these publicly traded companies, or not necessarily public, but companies that have their own equity, their own shares. And what they do is they buy a crypto asset with money that they get from issuing more stock or selling convertible notes. I don't know, the details aren't that important. But in any case, it's a form of leverage. It's a form of having assets on your books and taking on debt. That's what is happening with the way that Samsara automatically allocates ANA into an unbreakable treasury. But the difference here is that there's no forced selling. There's not going to be some eventual day, some black swan, where we're forced to sell the ANA. That will happen with these treasury companies. They're going to sell one of these days, and then nothing goes up forever. But it doesn't happen with an AVM. So we're not inspired by these treasury companies, sort of came upon this strategy independently, but it's a good close approximation of what's going on here, which is you believe in an asset. Your goal is to have as much of it as you can. We're not issuing shares to buy it, and we're not backing liquidatable loans by it. That could result in a cascading liquidation crisis. No. But it is similar, where the way to use ANA as intended, at least the way I use it, is you just hold it forever. And if you need some income, you just borrow, which again, in most jurisdictions is tax-free because it's debt. And then you retain your exposure to the asset on its way up. So that rounds out the picture for the strategy with this. I will say one more thing about the future of the Nirvana app. Samsara is fun. It's greenfield. It's a way for the team to test out new patterns with UI, new ways to make it understandable what's going on with an AVM. What does it mean to borrow? What even is the floor price? How do you understand liquidity? We're trying some things out new here. because we've learned from feedback and our mistakes with the Nirvana UI. And after this soaks for a little bit and we get some feedback, then start migrating the best of breed in this experience back into the Nirvana app and improve the Nirvana experience based on the learnings that we get from this. So what will be coming up soon with Nirvana is an injection of the new features that we're getting here. Features being that a portion of the fees gets invested into the floor. So the floor is always ratcheting up ever so slightly. Well, not necessarily slightly. It depends on the volume. It depends on how much is governed to go towards it. And then also the layout of the UI, the way certain quality of life improvements, things like that. Okay, so we will follow up in our social channels on X and elsewhere with this URL. Please come in, break it, let us know about it. I'm going to be watching the servers, see how they handle the load, and mainnet soon with all of this. Okay. Thank you all for your time. I hope you're having a good mid to your week, and I'll talk to you all soon. Bye-bye.